Hello students, welcome to BYJU'S IAS. Welcome to a session on economy this week, wherein we'll be taking up some of the very important articles that have appeared in various business related newspapers and we'll be analyzing these particular articles. For this particular video, I've taken the time period from 2nd of September to 15th of September 2019 and the articles that I've chosen are from Business Line, Hindu, Business Standard, Indian Express and Live Mint. Let's begin this particular discussion. The first two articles that I've picked up are related to the issue of bank mergers. One article I've picked up from Business Standard newspaper and the second one is from Indian Express. If you read both the articles, they will give you the critical evaluation of this particular idea of a bank merger issue in case of India. Now please understand, this is not the first time that the government of India has proposed to merge the public sector banks. And it can afford to take this particular decision for a simple reason. PSBs are majorly owned by government of India. That is, more than 51% of the shares of these particular PSBs are owned by Government of India. Since it is a majority owner, it can simply take these kind of decisions. In the last couple of years, Government of India has taken a decision to merge the 5 associate banks of SBI with the parent bank, that is SBI itself. Then it decided to merge Bharatiya Mahila Bank, which was again owned by Government of India, with SBI. Then, in the last couple of years, it decided to merge 3 more public sector banks, that is Bank of Baroda, Dena Bank and Vijaya Bank was merged into one entity. And now very recently, Government of India has decided to merge 10 public sector banks into 4 public sector banks. Now the points which are given in both these particular articles, I'll be consolidating these particular points, I'll be adding many more points and I'll be giving you a critical evaluation of this particular idea or the concept of a bank merger here. Now why does Government of India go for a bank merger? Some of the reasons or objectives with which they go for bank mergers are these. 1. The number of banks are very high in case of India, especially let's say public sector banks. They want to reduce the number of public sector banks. And when the number of PSBs will come down, regulating these particular PSBs will become much easier. First reason. Second reason, very often we have seen that rather than having a higher penetration in the rural part of India or rural side of India, you will see the concentration of these particular banks in urban centers. Now, Government of India says, rather than having Bank A's branch here and Bank B's branch here or Bank C's branch here in the same street, why don't I merge and have a single bank branch here and 2 more branches which are closed here will be opened up somewhere else, which will lead to what? Penetration of banking services in rural part of India, availability of a credit for purposes such as agriculture in rural part, so on and so forth. Rather than concentrating these particular banking services, I want these banking services to spread across. That is another objective. Third objective, they want to achieve economies of scale. That is, let's say earlier in the same street in a city, you will see 3 banking branches here. 40 employees are there. They are handling 10,000 customers. Now, rather than having 40 employees and 3 branches, Government of India will merge this particular bank A, B and C. Have only one bank here. Now, this particular banking branch will have, let's say, 15 employees and will handle all the 10,000 customers. The number of employees which are required to handle the same number of customers will come down. The requirement to have back-end branches which will provide the services to these particular branches will also come down. It will lead to pooling of the technology, pooling of the deposits, so on and so forth, which is basically nothing but the concept of economies of scale. So these are some of the objectives keeping in mind which Government of India has proposed these kind of mergers. But the idea of a big bank, that is basically SBI and now again we are seeing was recommended by Narasimhan Committee. And Narasimhan Committee basically recommended that the banking structure in India should have a 3-tier structure. That is, at the highest level, there should be 3 to 4 very big banks which will cater to specific types of customers or borrowers in the market, will keep competing amongst themselves. At the lower level, they should be around 8 to 10 national banks and below this, they should be rural banks. Government of India has basically cited this particular recommendation of Narasimhan Committee and is undertaking these particular kind of bank mergers. Now, these are the objectives. Apart from this, one more very important objective that you need to remember is India does not have very big banks which can compete at the international level. That is, we do not have those big banks which will be listed or which will be featured in, let's say, top 50 banks in terms of a size of the balance sheet. Despite having these mergers, we are unable to meet this particular criteria. Now, why this criteria is very important? It is important for a simple reason. Rather than the Indian companies being dependent on the foreign banks to provide the financing for them, if India has got sufficient number of big banks which will not only compete at the domestic level but also at the international level, these particular big banks will be sufficiently catering to these particular financial needs of not only Indian companies but will also give a very tough competition in the international market. These are the major objectives citing which Government of India is pushing this particular concept of a bank merger. But having said so, what are the concerns or issues with respect to this concept of a bank merger? First, whenever this kind of a bank merger has to take place, the independence of making decisions should be given to the boards of the banks. That is the precise reason why the boards of the banks are actually set up or people are appointed into these particular boards. They will take into consideration various issues or various features, for example, efficiency, and take a decision to merge with another bank or to acquire another bank. But it seems like since Government of India owns these particular banks, Government of India is basically marrying these particular banks without looking into efficiency factor. That is a precise reason the author in the second article, that is Mr. D. Subbarao, who is one of the very respected economist and the former governor of RBI, says that in the past mergers of the public sector banks, we have not had any material outcome in terms of efficiency in the functioning of the banks. In simple terms, although while merging we say we will gain economies of scale, this advantage of economies of scale has not been felt after the merger. This is what he says. This is one concern. Second concern, yes, after merger, these banks will become bigger, their sizes will increase, but the danger of a spillover will also increase. Now, what do you mean by spillover? Imagine a situation where SBI files for bankruptcy. Again, imagine a situation. If SBI files for bankruptcy, can I simply say it will have large-scale repercussions or impacts on other banks, stock market, credit market, corporate sector, so on and so forth. Why? For a simple reason, all these sectors are interconnected. And whenever one entity falls like this, the impact of this will be felt by all these connected sectors. This is what I'm basically referring to as a concept of a spillover. So when the banks will become larger and larger, the danger of a spillover will also keep on increasing. That is the second concern which has been raised. Third, the work culture of the banks will differ. The area of concentration of these particular banks will differ. The main business areas of the banks will differ. And when such a huge difference exists in these particular banks, how are you going to knit all these banks into one bank? This is another concern. Apart from this, another very important concern which has been raised by various experts is what about the interest of the employees? That is, post the merger of 5 associate banks with the parent bank, that is SBI, many of the people took VRS or were asked to take VRS. Now, who will protect the interest of these particular employees? That is the precise reason. After the announcement of the merger of 10 banks into 4 banks, many of the trade union or employee unions of these particular banks have opposed this decision of the Government of India. More importantly, Mr. D. Subbarao raises a very pertinent question. That is, he says, even today, is there a requirement of having public sector banks? Is there a need for public sector banks in the present situation? We went for nationalization back in the year 1969 and in the year 1980, and the economic situation, structure of the economy, need for penetration of the banking services was very much different at that point of a time. Hence, we went for nationalization, wherein the ownership of these particular privately owned banks was transferred from the private sector to the Government of India. He says, in the present context, is there a need for these kind of PSBs? That is the reason various experts have stated that rather than taking these kind of measures where banks will be merged into bigger banks, why don't you implement recommendations from various committees such as PJ Nayak committee? This particular committee has stated that one of the issues which plagues the banking sector is the day-to-day interference or the interference of the government of India in the functioning of the PSBs. Rather than allowing the government of India to interfere in the functioning of the PSBs, this committee has recommended that a holding company must be set up, that is bank holding company must be set up, and the shares or the ownership of the PSBs must be transferred from government of India into this particular company. And henceforth, the PSBs will be looked after by this particular holding company, which makes better sense compared to merging these particular banks. So these are some of the points in favor of the merger, some of the points raised in concern of the merger issue, which are given in these particular articles. Now, based on this particular discussion, let's have a look at a question here. Reserve Bank of India regulates the commercial banks in the matters of liquidity of assets, definitely yes. Branch expansion, yes. Merger of banks, yes. Winding up of the banks, yes. All the four are correct. Right option will be option D, 1, 2, 3 and 4. Next, I've given descriptive questions also. 1. Critically evaluate the issue of bank mergers in India. 250 words. You are expected to write, start with intro, then write what are the pros, what are the advantages of this kind of a merger, what are the concerns or issues related to the merger, then what is the way forward. That is what is expected from this particular question. Apart from this, I've also given one more question. Reforms announced by the government in the banking sector are akin to missing the wood for the trees. In simple terms, the question says that whatever reforms have been announced by government of India, especially in the banking sector in the last couple of years, they will address certain issues, they will address certain concerns, but they will not address the structural issues which are plaguing the banking sector. For example, understand this. The former RBI governor, Mr. Urjit Patel, basically stated that the regulation of the banking sector should be ownership neutral. This is much more applicable in the present context of a debate around urban cooperative banks. Now, what is the concept of urban cooperative banks? The most important feature of UCB is regulation of UCBs is not completely under the purview of RBI. I'll repeat the statement. UCBs are not completely regulated by RBI. There is a dual regulation in the UCBs. That is, RBI will only focus on certain banking activities, but the administration of the UCBs is solely under either the central government or under the state government. But very recently, because of one of the UCB going for bankruptcy or coming under the scanner, people started blaming RBI. But RBI basically says that UCBs do not come under complete regulation of RBI. And since they do not come under complete regulation of RBI, how can you hold RBI as responsible for this kind of a mess in UCB? So basically, there are various structural reforms which are required to address the situation or the issues in the banking sector. For example, setting up of a holding company, transferring the ownership, not allowing Government of India to interfere in the functioning of the banks, allowing RBI to completely regulate all the types of banks in India. There are so many issues to address this. The Government of India has to implement long-term reforms or structural reforms rather than taking reforms which are myopic or short-term in nature. This is the crux of the question here. So these are the questions related to the article. Let's look at the next article, which is related to economic slowdown and what should Government of India do in order to reverse this particular slowdown. Now, in simple terms, economic slowdown basically refers to reducing GDP growth rate. The GDP growth rate compared to a reference time period, that is basically for the same quarter in the last year, the GDP growth rate keeps on declining. This basically represents a situation wherein we basically say there is a slowdown. Now, there is no denying the fact that Indian economy is going through a slowdown phase, where GDP growth rate is actually declining. Now, question is, what should Government of India do in order to reverse this particular slowdown? Because please understand, the GDP slowdown can be reversed in two methods. One, either give benefits to the corporate sector, ensure that they will produce more employment will be generated, and when more employment will be generated, demand will be generated in the market, and production will again increase, which basically means there is a reversal of the slowdown. or you can simply say a revival of the growth. Or else you can address this particular slowdown of GDP from the demand side also. What can be done? In simple terms, increase the money supply in the market directly in the hands of the buyers. For example, reduce the income tax rate, increase the subsidies which are given to the people, so on and so forth. By doing these particular steps or taking these particular measures, government can ensure that money directly reaches into the hands of the buyers or consumers in the market. And when more money is in the hands of the consumers in the market, demand obviously will increase. And when demand increases, the production and supply should also increase, which is nothing but reversal or revival of the economy. So basically, understand this, government can address the slowdown either by taking reforms to address the supply side or taking reforms to address the demand side. So far, what Government of India has done is it has tried to address the slowdown by taking reforms or steps on the supply side. Various experts say that rather than taking reforms on the supply side, why don't you take measures on the demand side? By doing what? Reduce the income tax so that more money will be put into the hands of the consumers. Please understand this. Very recently, Government of India has reduced the corporate tax rate. And with the reduction in the corporate tax rate, obviously Government of India has foregone a huge amount of revenues. As per estimations of Government of India itself, it has foregone around 1.45 lakh crore rupees worth of tax revenues this year. The experts are saying, why don't you incur the same amount of expenditure foregone by reducing the income tax rate? For a simple reason, yes, by reducing the corporate tax rate, you will give certain impetus to production in the market, but the outcomes or the benefits of this particular rate reduction will be felt in medium term as well as long term, not in the short term. Whereas Government of India needs to reverse this particular slowdown trend in the immediate future, not in the medium term nor in the long term. So how can Government of India address this slowdown and reverse this particular slowdown in the short term? By increasing the aggregate demand in the market. And the issue has been that the experts are saying rather than addressing from the demand side, Government of India is addressing this particular slowdown from the supply side, which no doubt is a good reform, but not the required reform at this particular context of time. Because please understand, this particular demand of reducing the corporate tax from the 30% to 25% slab is not a new one. It has been demanded by the corporates for many years now. In fact, one of the former finance ministers, Mr. Arun Jaitley himself had stated in one of the budgets that Government of India would be reducing the corporate tax rate from 30% to 25%, which has been done in this year. So basically, argument is, why are you addressing the supply side issues? Right now, the issue is aggregate demand in the market is very less, which will be reflected in lower GST collection also. Because please understand, GST is a consumption based tax. That is, you consume, you pay for it in the form of a GST. And in the recent times, we have seen that GST collections also have declined, which basically means aggregate demand or total demand in the market is actually declining. So Government of India should take reforms to address the demand side rather than taking reforms to address the supply side. This is the crux of the argument here. Now, based on this, let's solve a question. Which of the following measure or measures may be taken in order to address the slowdown situation in India? Decrease the policy rate, that is basically repo rate. That is what RBI is doing now. So yes, this will be to a certain extent addressing the slowdown in the economy. Decrease the income tax rate. Yes, this will also address the slowdown. Doubling the Manrega wages. Yes, this will also address a slowdown in case of Indian economy. So all the three are correct. Right option will be option D, 1, 2 and 3. The next article is related to GST revenues. The crux of the article which is given here is the GST revenues in the recent times have started slowing down, and if this particular same trend continues, the total GST which will be collected, there will be a shortfall of more than 40,000 crore rupees. And for the year 2018 and 2019, the average GST collection per month that was put as a target by Government of India was somewhere in the range of 1.12 lakh crore rupees. And on average, per month, they collected a revenue of just under 1 lakh crore rupees. As a result of which, compared to the target, there was a lower GST revenue collection. And the same trend has continued even in this particular year. Now the concern is that the states have given up huge amount of taxation powers under the ambit of GST. That is, earlier, some of the indirect taxes were fixed by the state governments. The revenue was collected by the state government, used by the state government. With introduction of a GST, some of these very important indirect taxes have been subsumed under the ambit of a GST. And under the ambit of a GST, there will be CGST component and SGST component. And this SGST component is expected to go to the states in the form of a revenue collection by the states. And in case if there is a revenue shortfall, that is, understand this, under this particular concept of a GST, Government of India has stated it will be providing the compensation for a period of 5 years. And to calculate compensation, basically they have taken the base year of 2015 and 2016 as the base year, and whatever were the revenues through these indirect taxes collected by these particular states, it will be taken as a base for calculation of expected revenues in the coming years. What do you mean by this? Let's say hypothetically, some of these particular taxes which have been subsumed under the ambit of a GST, through these taxes, a particular state government, let's say X, used to collect 100 crore rupees in the year 2015 and 2016. From this 100 crore rupees, we assume that in next year, 2016 and 2017, the same state would collect 114 crore rupees. That is, a natural increase of 14% per annum will be considered. From 2016 to 2017, the expected revenue collection through these kind of indirect taxes will be 114 crores plus 14% of 114 crore rupees. This is how the expected revenue calculation will be done. But more importantly, understand this. Whatever is the expected revenue which is supposed to be collected, let's say hypothetically is 160 crore for a particular financial year, but the states under the ambit of a GST were able to collect only 100 crore rupees, then the central government will pay 60 crore rupees in the form of a compensation. This is one point. Second point, this compensation will be paid only for a period of 5 years, which will be ending by financial year 2022. Third point, to pay this particular compensation to the states, central government under GST, that is specifically under the slab of 28%, has covered certain goods at a rate of a 28% plus cess. In simple terms, it not only collects a GST of 28%, it also imposes a cess. Whatever is a collection from this particular cess will be kept under compensation fund. And central government will be using the money from the compensation fund to pay for the compensation to the states. This is the third point. Fourth point, imagine a situation in the compensation fund, the money that is collected is 100 crore rupees, but the compensation which is supposed to be paid by the central government to the states is 200 crore rupees. In simple terms, compensation which is to be paid by the central government is higher than the compensation cess fund which is collected by the central government. In this case, this particular shortfall of 100 crore rupees has to be given by the central government from its own finances. These are some of the points related to compensation. Now, what are the concerns which have been raised by various experts related to this trend of a GST revenue? One, the GST revenues are not getting stabilized. And if they don't get stabilized, there is a volatility in terms of a GST revenue collection. It puts more pressure on the finances of the state government. Why? Right now, if there is a lower collection of GST, central government is going to provide the compensation. But for how many years? Only for 5 years, which will end by financial year 2022. After that, even if the GST revenues are volatile, if the collection is very less, central government will not be providing any kind of a compensation to these particular states. That is the precise reason the states are worried. The states have approached Finance Commission. They are asking for the extension of this particular period of compensation fund. Second concern is, it has been seen that whatever fund is collected by the central government under the compensation fund, it is falling short of the total compensation which is supposed to be paid by the central government to the states. In these cases, on one side the GST revenues are falling, which also means that the revenue for the central government will also keep on falling. And on the other side, central government has to pay compensation to the states from its own funds because the cess fund collection is lesser than the compensation which is supposed to be paid to the state, which again puts the pressure on the finances of the central government. These are some of the concerns which have been raised in this particular article. Now, based on this discussion, let's have a look at a question here. Consider the following statements. The compensation will be paid to the states under the GST for a period of 5 years. Yes, it is true. For the calculation of revenue loss, 2015 and 16 has been taken as a base year. Yes, it is also true. Right option will be option C. Both the statements are correct or true. Let's look at the next article, which is related to imported inflation. Before looking at the concept of imported inflation, first, what do you mean by inflation? Inflation basically is a measure which tells you what has been the increase in the price level of basket of commodities. I'll repeat the statement again. Inflation represents the increase in the price level of basket of commodities. Now, what do you mean by imported inflation? India consumes goods and services, and substantial part of these particular goods and services are imported. And when the import cost of these particular goods and services increase, which essentially means when they fall into the market in Indian economy, they become costly. And when these goods and services become costly, and remember this, these goods and services are imported, and when they become costly, the price level of basket of commodities will also increase, which is nothing but inflation. But this particular inflation is being caused because of the imports. Hence, this situation is called as imported inflation. Now, why will these particular goods or services become costly in the Indian market? It could happen because in the international market, the prices have increased. For example, crude oil prices. Let's say OPEC decides to cut down the production, and when the OPEC cuts down the production, supply to the market will also come down. As a result of this, the market prices will start increasing. And since we import a substantial part of the crude from the OPEC, the market prices are higher, and when they land into India, the market prices in India will also be higher. First reason. Or this could be because Indian rupee is depreciating. Now, question is how depreciation of Indian rupee will affect the imports. And first of all, what do you mean by depreciation? Depreciation, I am speaking from the context of Indian economy. Depreciation basically means the rupee value has declined compared to a foreign currency. And since the universal currency is dollar, I'll compare that with the dollar itself. Whenever Indian rupee value falls compared to the dollar value, this particular situation is called as depreciation of rupee. What do you mean by this? Let's say hypothetically yesterday $1 exchange rate was 40 rupees. Today $1 exchange rate is 50 rupees. So what has happened? To purchase $1, yesterday I was supposed to pay 40. Today I am forced to pay 50 rupees. Has a rupee purchasing power declined? Yes. And whenever the purchasing power of a rupee declines like this, we'll basically say rupee has depreciated. Now some of the points or facts here. Amongst the Asian currencies, in this year, Indian rupee is one of the worst performing currencies. Second point, Indian rupee has depreciated by more than 2.7% in 2019 alone. Now, whenever rupee depreciates, it will have a negative impact on the imports. What is the meaning of this? I'll take the same example. Yesterday, $1 was of 40 rupees. Today, $1 is equal to 50 rupees. It means, yesterday, if I imported good worth $1, when it landed in the Indian market, its cost was how much? 40 rupees. Today, the same $1 worth of good will land into Indian market. The cost will be how much? 50 rupees. So, the market price has increased. And when the market price increases, it will lead to what? Inflation, hence called as imported inflation. So, again, I'll repeat it. Imported inflation could be caused because the international market prices of these imports have increased, or because rupee has depreciated, or because both of them are acting simultaneously. In case of India, the imported inflation is a concern right now because Indian rupee is depreciating. As per RBI report, it states that whenever there is a rupee depreciation, to a certain extent, it is going to affect the inflation rate in the market. So this is the gist of the article given here. Now, based on this, let's have a look at a question here. which of the following are likely, underline the term, likely outcomes of depreciation of Indian rupee? 1. CPI may increase. Yes, it may increase. Second, imports will become cheaper. No, imports will become costlier. Exports will become competitive. Yes, ideally. I'll repeat the term. Ideally, when rupee depreciation happens, exports should become competitive. But in reality, it is not so for a simple reason. Rupee appreciation or depreciation is one of the factors which will affect our exports. I can understand this. I'll repeat the statement. On paper, theoretically, yes, with rupee depreciation, exports should become competitive. But in reality, it has been seen that in case of India, whenever rupee has depreciated, rather than exports increasing, in case of India, reverse has happened. Right? So, in this case, since the question says likely outcomes, I'll take this as correct. So, point 1 is correct, point 3 is correct. Right option will be option B, 1 and 3. So, these are some of the articles as well as the questions related to articles for this particular time period. Thank you. Have a good day.